अच्छा जी, अस्सलाम वालेकुम एंड वेरी गुड आफ्टरनून। सबसे पहले मैं आपको ये खुशामदीद कहता हूँ क्लास में। यू आर वेलकम। टुडे वी आर डिस्कसिंग अ वेरी इंपॉर्टेंट क्वेश्चन एंड दैट क्वेश्चन इज बेसिकली ऑल अबाउट एडजस्टमेंट्स एंड टी अकाउंट्स। सो हमारी क्लास में बहुत सारे स्टूडेंट्स बैठे हैं। सो आमना आई वुड लाइक टू रिक्वेस्ट यू दैट प्लीज रीड आउट द क्वेश्चन। हमेशा रीड आउट कहते हैं जब पढ़ना हो। यस,
Amla is a trader.
आमला इज अ ट्रेडर। There's a person, her name is Amla, and she is a trader. Trader का मतलब she buys and she sells. Then
Her financial year ends on 31st December.
her financial year ends on 31st December. You must understand the meaning of financial year. Financial year you can start at 1st January. It means 12 months end on 31st December. So this financial year is a calendar year. You can have another type of financial year. The year will start at any month except for January. Not in the January, but you can start, for example, in July. So now we start counting. July, August, September, October, November, December. 6 months from 2021 and 6 months from 2022. January, February, March, April, May, June. It means complete 1 year means complete 12 months. 6 months from here and 6 months from here. It means in this month we have 2 calendar years. And this type of year is called an assessment year or a fiscal year. So Amna, in this question, what is your idea? Here it is a financial year, which is a calendar year or a fiscal year?
Calendar year.
Calendar year. Very good. You learn this thing. Calendar year. Please go on.
On 1st Jan, Amla maintains one combined account for rates and insurance.
What happens in organization? If you go, when you go inshallah in practical life, you will see that sometimes people, they do not maintain separate accounts, but they can maintain a combined account as well. So here she is maintaining 2 accounts together, rate and insurance. And we should know, rate means property tax. In UK, property tax are also known as rates. You get the point? Next.
On 1st January 2016, 3 months rate $480 was outstanding and 4 months insurance totaling $700 was prepaid.
Now listen, this is the most important thing. Before I discuss this thing, what I want you to understand or to learn that what is the requirement of the question. Can you please go directly to the requirement and tell us that what is the requirement of the question?
Prepare the rates and insurance account in the ledger of Amla for the year ended
Very
31st
good.
December.
You see what is the requirement? Always focus in your life. So requirement is to prepare an account. I will remind one thing, you know that. Accounting is all about financial recording and financial reporting. And when we start the record, the first thing is transaction. A transaction is a financial information which must be in past with the money value. Then we need the proof of the transaction. For that we make what? Source documents, right? And then from source document, where do we go? Day books. We have 6 day books: sales day book, purchase day book, sales return day book, purchase return day book, journal and cash book. And from day book we go to ledgers, and in ledgers we make accounts. We have 3 ledgers: GL, PL and SL. Journal ledger, sales ledger and purchase ledger. So now the requirement is to prepare a T account. So what do? I want you to Qasim is helping us here as well, and he's creating a video. So Qasim, I want to please show this T account also in your video, and then you write rates and insurance. This is a T account, and T account is in some ledger. So if someone asks you, if I ask you, Qasim, in which ledger this account you will find, so you can say, sir, in the journal ledger. In journal ledger we have all nominal accounts are nominal. Nominal means all expense and income account, and all real accounts. But suppose if I want to make an account which is related to a credit customer or credit supplier, for that I need to make the account either in sales ledger or the purchase ledger. In sales ledger I have personal accounts of customers, credit customer, and in purchase ledger I have accounts of credit suppliers. So here the requirement is not that. Here is the requirement that I am supposed to make the account. So what do? We know this is the debit side. Debit does not mean increase. Debit does not mean decrease. Credit does not mean increase, credit does not mean decrease. Debit and credit are just two sides of a T-shape. And we should know that we should write DR means debit recording and CR means credit recording. And then what we need to do? We need to write the currency unit. I'm not putting the currency in this question, dollar or pound?
Dollar.
Dollar. Generally, in international examination, the dollar sign is used, which is called currency unit. So you need to write the currency unit as well. So when the currency unit here, now you are supposed to write the number in the T account. And as I told you before, that writing the number, specifically writing the number in the T account, has a term, has a name. It is called posting. So we are going to post. So now what are the numbers in the first line? What did you read? Can you please read it again?
On 1st January 2016, 3 months rate,
3 months rates,
$480
$480.
was outstanding.
Stop here. 1st January. Please pay attention, everybody. He's talking about rates. On 1st January, the first decision is what? Either I should write the number on the debit side or the credit side. For that, I need to understand that what is the nature of this account. So what did you say? This is outstanding, yes or no?
Yes, sir.
Outstanding. Any idea? Outstanding account is an asset account or the liability account? Liability account. The class is improving. Very good. Liability account. And we know that when we discuss about liability, a mnemonic always in our mind, and that mnemonic is
Credit.
DEAD. Debt. CLIC. Click. It means expense, assets and drawing. Always we record when they increase on the debit side, and liabilities, income and capital always on the credit side. But one more important thing, we do not have any expense or income account as an opening balance. We always have the opening balances of either liabilities, capital or assets. So what we are doing, Amna informed us, sir, on 1st January, so I write 1st January 2016. 2016. What is the amount?
$480.
$480, and that is outstanding rates or insurance
Rates.
rates. So what I write BD. Balance. BD means opening balance. The opening balance of insurance rate or rate?
Rates.
So opening balance of rate is 480. Now my question. This number has come from where? This is the opening balance this year. So this balance has come from where? From last year. It means in the last year we received the services, but we did not make the payment. So when we received the services and we did not make the payment, it means on one hand last year in income statement we recorded the expense of 480. And because of we did not make the payment, we recorded the 480 amount as a liability as well. Last year 31st December 2015. Now my question, when the year will end, the people will forget your liability? No. Very good. If you have taken a loan from me, the whole year you did not make the payment, so do you think that the people will forget? You will forget? No. It means the closing balances of the liabilities will become the opening balance of next year. So what did I do? I just transferred the last year data to the current year. What is the next point in the same sentence?
4 months insurance totaling $700 was prepaid.
Now listen. You have paid last year 700, and Falak, you have paid this amount to me, 700, as insurance.
Yes, sir.
And you said last year that, sir, I did not receive the services as yet. It means your claim on me. And that claim is basically what? Your asset. So what's your idea? Do we record the assets on the debit side opening balance or the credit side? Opening the debit side. Assets are always on debit when they pay. So what we need to do, we need to write here 700, and the opening balance, the date is 1st January 2016, and this is opening balance or balance BD, whatever you write, opening balance of insurance. Suppose if this question was of 2 marks. Now listen, I am telling you something interesting. Suppose if this question was of 2 marks and there were only 2 pieces of information, so the marking scheme will be something like this: 1 and 1. You understand?
Yes, sir.
I have given you a question. In that question, I have given you only 2 pieces of information, and I want you to make a T account up to here only. And if you make the T account in this way, it means you earn 2 marks. This is the way to mark the questions by the person who is checking the question. So our question is not. We are not ending the question at this point of time. We are going further. So please read further. What is the next point?
During the year ended 31st December 2016, the following payments were made by check.
Okay, now listen. You are making the payment by check. Just think, forget about the numbers. Just forget about the title of accounts as well. Just remember one thing. We are making the payment. So Amjad, when we are making the payment, our money is increasing or decreasing? Very good. Decreasing. Wonderful. So when the money is decreasing, amount from your bank is increasing or decreasing? Decreasing. Very good. Money is going out, right?
Yes.
Wonderful. Now the next question. When the money will go out, the bank account will be debit or credit?
Credit.
Credit. Very good. You know how you are learning? You are learning in steps. You are understanding now. You are going in the correct direction. The bank is credit. Double entry system says every credit has a debit. So when the bank is credit, some other account should be debited, and that other account is this which we are making. We are making an account. And that's the rate and insurance. But we are not making here the account of bank, because of that is not the requirement. Our requirement is to prepare only the rate and insurance account. Now an important question, and that is very important, that when you make the payment, do you think so that is your expense? No. Expenses do not relate to payment. Expenses relate to
Services.
Very good. It means we make the payment, but we do not know that out of this payment, how much is expense? How much is the payment of previous liability? Or how much is the payment against advance? We just know one thing, that payment is basically a payment, means we need to record in the account on the debit side. So can you please let us know that what are the payments?
Rate 16 month to 31st January 2017. $2,560.
Now listen, analysis, 2,560,
516.
and that is for insurance?
Rates.
Rates, that's for rates, okay. And is there any other payment?
Yes, sir.
And what is that?
Insurance 12 months to 30 April 2017.
And what is the amount?
2,400.
2,400. Now interesting. And that is for insurance. Now listen to me please carefully. We are making the payment against these 2 heads of accounts. The first thing should be clear to you. These 2 numbers are not expenses. These are just payments. Number 1. Number 2. When your accounting year will start, it is not necessary that your payment year related to some title also start. What do I say? What I am saying, try to understand. Your accounting year starts, for example, 1st January 2016. So it means your accounting year will end on 31st December 2016. 12 months. Sweetheart, it doesn't mean that your any payment will also start on 1st January and ends on 31st December. No, it is quite possible that your payment year against that expense either start on 1st January, possible, or 1st February, or even 1st December. So suppose if you are making a payment against any expense on 1st December, so is this payment against this expense will start, you are starting from 1st December. So December, January, only 1 month you counted in this accounting year. Remaining 11 months are your payment in advance. Do you understand what I said?
Yes, sir.
What do I mean? It means we are interested to record only and only those part of the payment against which we receive the services. That is our expense. So now we are looking at insurance and rates. So insurance rate amount is 2560.
Yes, sir.
And this is for how many months? 16 you said?
3 months.
Okay, now listen. Now I am teaching you something which is called critical thinking. Which is called analysis. Critical thinking means you get something interesting which is followed between in the lines. Between in the lines means the people cannot find it, but you are going to add value due to that specific information which you have. So now what we are doing, we are writing in the working page, we are writing W1. W1 means working one. You can solve this question and upload. These type of questions you need to upload. So working one, 2560, and that is about race. So better to write here race. We are talking about race. And this is for how many months?
16.
Very good. Now my questions to you. If you want to direct your mind, what the next step should come? The next step should come, I want to find out per month payment. You're directing your mind. In the live also you should direct your mind. So you're directing your mind at 2560 divided by 16. Can you please calculate that how much is coming? 160. So Nawab told me, Sir Munawar, 160 is an amount against rate, okay? For what? For 1 month. It means when we receive the services of 1 month, my 160 expense. Now the second question. Amjad, this payment is covering what period? Why I am interested in the period? Because I want to see that in the period in which I am maintaining my financial year, in that specific year, how much I received as services, so I can record as an expense. So now we start. When this 16 months ends,
31st January 2017.
now listen. Our accounting year ends on 31st December 2016, and this is going in 2017 1st January. What does it mean?
31st.
It means 31st to 1st.
31st.
It means, listen to me carefully, 31st January 2017. Now, listen, my accounting year ends here, 31st December. But this payment is for 16 months. Try to understand, the story is very interesting. The payment is for 16 months. So 1 month, which is of the January, I did not receive the services. It means 160 here, the total amount is 2560. Out of 2560, 160 की पेमेंट जो है उसके अगेंस्ट में मैंने सर्विसेज रिसीव नहीं की because of the year ends on 31st. No, year accounting year 31st December, but the payment year ends on 31st
January.
So when December ends, Qasim, January is left. So this period of time, look at the board. This period of time, this one, I did not receive the services. So when you did not receive the services, can you record the expense of that payment? No, we should not record the payment of that specific portion of the year. Okay, so 1 month we know. Out of 16, 1 month we have done. How many months are left? 15. Very good. Out of 16 we have done 1. 1 we know that where it will go. Out of 16, 1 we know. That one is our prepayment. We have given in advance. We did not receive the services. Now how many months are left?
15.
Now listen. In 1 year, do we have 15 months?
No, sir. No. 12 months.
We have 12 months. Now listen. It means this is the payment of this 12 months and some previous 3 months. We just check. Is there any liability on us?
Yes, sir.
Look at the account. Is there any liability for rates?
Yes, sir.
480.
Yes, sir.
Let's check 480 divided by 160, what comes? 480 divided by 160, answer is 3?
Yes, sir.
Yes. You understand what happens? It means you are making the payment. Look at the board, everybody. It means you are making the payment in this way. We are making the total payment of 2560. This is interesting. Out of 2560, 480 was the previous liability against which you received the services in the last year. It means that was not the expense of this year, that was the expense of last year, but the liability was due on you because of you did not make the payment last year. So this year, when you are making the payment, out of 2560, 480 you make payment of that. 3 months ka hisab ho gaya. Then 1 month you are paying for the advance. 3 and 1. Total is?
4.
And total payment for 16 months. 16 minus 4, what is the answer? 12. Very nice. It means 12 month services you receive, and for that you need to record the expense. So we just calculate 160 multiply by 12. What is coming?
21 मिनट हो
160 multiply by 12. What's coming? Sorry? 18? Please calculate on the calculator. Sorry? Yes, 1920. Now just check. 1920 for the current year.
Yes, sir.
For the next year, 160. For the previous liability, 480. When you take the total of these all, it should give you 2560. You can check. You understand? This is called adjustment. This is called, you understand, the breakup of the number. Now the next thing. Am I clear?
Yes, sir.
I'm not going fast, right?
Yes, sir.
I'm going more slow. Now listen. Just leave it. Now listen. What is happening? Now I need to record the expense. Because by this T account I need to record the expense. Excuse me. The rate 2560 was not the expense. That was the payment. And out of that payment, how much is the expense? The expense is 1920. So now listen and understand. How do we record the expense? Look at the board, everybody. How do we record the expense in the T account? We just write the number against which we receive services, 1980, and we write on the credit side a title, income summary. 1920, thank you. Income summary. Now, what is the meaning of income summary? Income summary means this amount will go in the income statement of current year. If current year, if I ask you, please tell me what is the rate expense for the current year? You say, Sir Munawar, the rate for the current year is 1920. Now you can ask me a question. So why on the credit side? The answer is very simple. We are closing the rate into an expense account. Rate was an expense, but it was recorded as a payment. So now the payment is being converted into expenses. So when we record as an expense, we always close the expenses in the account. So we close the account in which way? Double entry again. Income summary debit and rates credit. So how much did you transfer to the rate account as an expense? 1920. Now we talk about the last one. And what is the last one? Insurance. How much is the insurance?
12 months.
12 months. Interesting. If I tell you that this 12 months is for the current year, so whatever is the payment, the same is expense. If I say, this 2400 starts on 1st January and this 2400 ends on 31st December, this payment. And if I say this is the accounting year start on 1st January and ends on 31st December, it means you say, sir, look, whatever is the payment, against the payment I received all the services. So whatever is the payment, all is expense. But this is not the case. Here the case is different. So in this case, insurance is for 12 months, and when it is matured, ending date?
30 April 2017.
30th April. Very nice. Try to understand. Look at the board. First job. First find out the per month. When you find the per month, you make the things easy. Always remember. Bring the things in units. Always in life. go. Whenever you're learning, learn by baby steps. So 2400, working number 2, insurance. Look at the board. We are just concluding the question. Working number 2. How much is the amount? 2,400. Very good. What is the per month amount? 12. Very good. So what will come? 200. Very good. It means whenever you receive the services against insurance, every month your expense is 200. Now we start counting. This was 12 months, right?
Yes.
But that 12 months end on which year, which month? That's the important thing. These 12 months end either on 31st December or out of 31st December. In this question, out of 31st December or in 31st December? Very good. Out of 31st December. Be in the class. January, February, March, April. It means these 4 months are those 4 months against which did we receive the services or we did not receive the services? Very good. We did not receive the services. Wonderful. It means this 4 months means 200 multiplied by 4. The answer is 800. Very good. It means out of 800, out of 2400, 800 services we did not receive. So we just check. 2400 minus 800. The answer is?
1600.
It means 1600 should go to income statement. But one more thing, interesting thing. You always make the payment when the first payment is expired. Do you have any payment as your asset on me? For example, you make this account for you. You look at the board, there is a payment of 700 still there. This was also your asset. It means first this was expired, then you made the payment. You get the point? There are 2 ways to look at this payment. Number 1, now this is the concept. Accountants, what do they do? Suppose if I want to show a different picture, the real picture should be this. 700, your advance, think about you. 700, your advance on me. You receive the services of this 700. So when you, in this accounting period, January to December, you receive the services. Should you record the expense, yes or no? You should record. You should record, right? So 700 is gone. So 700 will go in income statement. Then you make another payment of 2400. Out of 2400, how many months are there against which you did not receive the services? These are 4 months. And the 4 months are what? January, February, March, April. It means your 8 months here and 4 months, the previous prepayment is matured or converted into expense. You understand? ये जो 700 रुपए थे, ये आपका एडवांस था मुझ पर. आपने उस 700 रुपए की सर्विसेज ले ली होगी, तभी तो मुझे नई पेमेंट की होगी. वो नई पेमेंट जो आपने मुझे की, वो 2400 की. तो इसका मतलब हुआ ये 700 रुपए गया इनकम स्टेटमेंट में. एंड आउट ऑफ 2400, चूंकि 4 महीने की प्रीपेमेंट स्टिल आपकी मुझ पर ड्यू थी, तो 2400 में से आपके कितने चले गए इनकम स्टेटमेंट में? 1600 और चले गए. 1600 और 700 कितने हो गए? 2300. Right? It means 2300 will go to income statement as income summary for insurance. And that is how much? 2300?
Yes, sir.
Yes. 2300. Now look, 2300. Now interesting things are coming to you. इसका मतलब ये हो गया. Now we are just concluding the question. Now you always make a bracket like this, a box like this. पहली लाइन, उसके पीछे 2 लाइनें, and these 2 lines are called ruling off. You are ruling off the account. Look at the board. You are ruling off the account. Now you are going to take the total. Please calculate 2400 plus 2460 plus 700.
5660.
5660. Very nice. What is the total here?
4700.
Now 4700. 5660 minus 4770. What is coming? 160 is coming? Check. 560 minus 4700. 960 is coming. 960. Wait. So our payment, 4 months. Yes, 4 month payment. We paid in advance 4 months. How much was the payment for? We made the payment for this. So one by one. Rates 2560. Out of 2560, we transfer for the rate 1920. Please minus 2560 minus 1920. What's coming? 160 is there. 480. Yes. 480 for how many months? No. 3 months. And what are those months? Please read the question for insurance. That was the payment and when it is mature.
Insurance 12 months to 30th April.
What is the amount?
2400.
2400. Insurance. I am talking about insurance. Look at the board, please. Excuse me. We are concluding the question. Out of this amount, how much is prepayment?
2,400.
This is the payment. I am asking about prepayment. Prepayment means against how much we did not receive the services.
7.
How? No, not 700.
800.
Why 800? 2400 for 1 month. 2400 for one year. 2400 divided by 12.
200. 200.
So 200 for 1 month. And for how many months we did not receive? January, February, March, April. 4 months?
Yes, sir.
This 4 months is your prepayment. Prepayment means the balance BD prepaid will come here for insurance. And this 800 will come here. And that is what? That is CD prepaid for insurance. Now one thing is left. I repeat. Listen. How much did you make the payment for insurance? Look at the board. 2400. You made the payment for 2400 and this payment will mature in which month? April? It means January, February, March, April. Against these 4 months, you did not receive the services. Your money in my pocket. This is your prepayment, your asset. So asset will become as a prepayment on the next accounting year as an advance, and the amount is 800, and that 800 will become as balance CD in the account on the credit side. We know that. Posting. Now we're talking about, after insurance, we talk about rates. The rate for how many months?
16 months.
Out of 16 months, we talk about 480, which is for how many months? 3 months.
3 months.
Forget about these 3 months. 16 minus 3, and then 12 months expenses. What are the expenses? 2300. It means 1 month is left. And 1 month was what? 1st January. It means we again make the payment in advance. And what was that?
160.
160. And that was also 160 prepayment. But this prepayment is for rates. Now I want you to please take the total of this side also. 480 plus 1920 plus 2300 plus 160. 5660. You saw? Your account is balanced in such a way that you need to create the prepayments from the account. This number will not go anywhere in financial statements. Just prepayment will go in current year's balance sheet. Your asset on me. I mean, you are claiming, Sir Munawar, look, I want to receive the payment. We're talking about from this point of view. Sir Munawar, I want to receive the services against insurance for 800 and against rates for 160. I said, okay, you're right. 160 and 800 is your opening balance for the next year, which will come in your balance sheet this year. If I will ask you, is there any liability on you? You say, no, sir, look. Whatever, because of in the account, you cannot see any balance CD as a liability here. No balance CD here. So whatever is the balance CD, that will become the balance BD here as a liability. But because of there is no existence of the liability, it means there is no recording on CDs on the debit side as a CD and on the credit side as a BD. This is an excellent way to understand an account in which the adjustments are coming. Now the last sentence. Sir Munawar, if I am making the cash flow statement, then what I will do? Listen, last things. If you are making a cash flow statement, cash flow means cash is going out. So how much is cash is going down? This much and this much is going out. So into cash flow, the amount of 2560 and 2400 will come in cash flow. Cash flow does not mean recording expense. Cash flow means recording outflow and inflow of cash. Number 2, look at the board. If you are making the income statement, then the expenses will be recorded of how much? This one and this one, 1920 and 2300. Income statement also concluded. Finally, if you are making the balance sheet, in the balance sheet you do not need to record any liability because we don't have any liability. Yes, you need to record the expense as a prepayment of insurance and prepayment of rates. And these were your assets. These are your assets, and you are supposed to record in your balance sheet as a current liability, current asset. In your current asset as in your balance sheet. I want you, please listen to this lecture once again. Thank you very much. You did a great job. Thank you. Pakistan Zindabad.